Yes, and I want to clarify, we're slightly bullish. We're not going to see a second half of 2020 type action, I don't believe, in the next couple of years. But the fact is the economy is growing, it's growing strongly. And even though the leadership seems to be changing from growth to value, but we do, and this is the types of stocks, but we do see earnings growing, and I don't see anything that over the next 6 to 10 months is likely to cause earnings to actually start declining.
And I know you look at all these fundamentals quite closely, earnings, and again, companies that, make life easier for people, products people need. You talked about CVS last time. It's done pretty well since then. Is that a name you'd stick with in this environment?
Oh, yes. We would still hold it. But it is up so strongly, needless to say, we're not as high on it as we were back then. But I think that's going to be a good long-term play.
MetLife was another one. It's up about 9% since you were on in October. It's up decently year to date as well. The insurance companies, we mentioned this a moment ago, the Berkshires of the world are all doing pretty nicely right now. Do you think that environment will persist for them? And why is it? Why is this? If you think this whole sector is a place to be so attractive?
Yes, the yield curve. I mean, there finally is a curve, even though many people are talking about a flattening because they see the 2-year not that much below the 10-year. But the key thing to remember is that QE has not stopped yet. So we don't know how high the 10 and the 30-year will go. So I think financial companies are likely to really be able to take advantage of an environment where the 30-year is higher than their cost of capital, which is more likely to be between the 6-month and 2-year.
Does that favor the insurance companies in particular, or would you be a fan of exposure to the big banks or the regional banks as well?
Yeah, well, I think banks first, but also insurance companies. And I think all of them are going to get solid advantages from this environment.
Before I get to the last name that you like, which is also in the healthcare space, where would you stay away from? I don't see energy on this list. I don't see a lot in technology. Where do you think, and why do you think there are parts of the market to steer clear of?
Right. Now, we're not staying clear of energy. I'm not suggesting energy names simply because they have done so amazingly well between 2021 and this year. Everyone is so excited about them now that we think they're good holds. But as far as someone who's trying to put together a small portfolio to begin, we generally tend to go toward names that haven't performed as strongly. What
about technology? Because the NASDAQ has really been the most buffeted, I would say, by kind of the complete reset of high valuation names, but also pockets of more stability in big tech.
Yeah. Technology, along with consumer discretionaries, are areas, frankly, we're most worried about. Not the individual companies, but the valuations. They have done so well over the 3-year period from 2019 through 2021. The big issue is how well will they hold up in any general price declining environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.